Well, another week is over and the S&P 500 is at another all-time high. Quite impressive, given that, if anything, the news was a little concerning this week. You had minutes from the Federal Reserve which suggested that the Fed was somewhat more hawkish about raising rates than perhaps people had thought. Elsewhere, perhaps the most interesting development came in Europe, where you saw a very dramatic rally in stocks at the end of the week after Mario Draghi of the ECB hinted very strongly indeed that he was minded to be rather dovish, saying that he wanted to get inflation in the Eurozone back up towards 2% without delay. You can see why he might be concerned about that if we show you this chart here, which compares the yields on German bunds compared to US Treasuries. Obviously, you're not going to see a decline in bund yields like that unless people are very bearish indeed about the prospects for deflation in Europe, about the prospects for growth in Europe. Arguably, the ECB is behind the curve. Also, this plainly creates the conditions for an ever stronger dollar, and indeed we have the dollar at a fresh 4-year high as we end this week. Elsewhere, the most important developments were in the Far East, where the Japanese officials are suggesting that the yen may have depreciated too far, just as China has surprised the markets by cutting rates for the first time in 2 years. Now, you could read that as Chinese anxiety over the strength of its economy, which makes it intriguing that the rest of the world seems to be as unworried about this as they are. You could also look at this as the worrying potential beginning of an Asian currency war. And that's, if we take a look at how the yen and the other two major currencies in the region, the Korean won and the Chinese yuan, have done compared to the dollar in the 2 years of Abenomics, you can see a quite dramatic improvement in the competitiveness of Japanese exporters compared to those other two. The risk of some kind of fight back has to be obvious. China plainly does have the ability to weaken its currency if it wants to. This is a very serious and important development that needs to be watched. As for the week that comes, it will be foreshortened here in the US because we have Thanksgiving holiday to look forward to. Beyond that, we will get GDP prints from a number of important countries, including Germany in the Eurozone. We'll also get minutes from the Bank of Japan, very important in the current environment, but perhaps the most important single event that we can see coming is the meeting of Opec. Could critically affect the price of oil after the very dramatic fall in crude prices that we've seen since the summer. Gloriously, they've decided to hold it on Thursday, Thanksgiving Day itself, when US markets will be closed. So the possibility of serious freak volatility on low volume certainly cannot be discounted. So it's likely that we do have an entertaining week in prospect.